What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over Mana as its price has seen a move that we called nearly spot on about 2 days ago. So with that being said, of course, we're going to talk about what we're seeing right now and what we are expecting to see in the future. So of course, with that being said, let's go ahead, let's skip the BS, let's skip the fluff, and let's get straight into the good stuff. So in the last video, we were talking about the fact that Mana was getting a little bit overextended, and that was my main focus of the entire video. I said for us to be able to notice this extension, we just have to pay attention to two things: our highs on our RSI and our price. As we can see right here, we set this lower high and we set a higher high. That's called bearish divergence. That was the first thing that I noticed. The second thing that I noticed is that although we were making good moves, that little bitty move that we made extended us to the top side of our Bollinger Band envelope. And due to the fact that we saw this combination, this is exactly what I said.
Retracement, something on the daily charts, looking at our Bollinger Bands that looks like us falling back down towards, who knows, $3.40, $3.50, and allows us to retrace back to our 20 simple moving average.
So as you can see, that is just about exactly what happened. We were up here, we were overextended into our Bollinger Band envelope, and we saw that resortment back to our moving average, our 20 simple moving average. Remember, whenever we measure these Bollinger Bands are measured by establishing 2 standard deviations away from a key moving average. So what happens is that a cryptocurrency's price can only standard deviate away twice from a moving average before eventually resorting back to it. And so what that means is that that's how we were kind of starting to gauge it. There was bearish divergence. We were starting to see this extension, and that says, okay, likelihood is we're going to start to push back to the downside, and that's why we weren't doing any buying in the last video. So now that that's played out, we are starting to kind of see a new picture being painted that may have a few bearish implications if we're being quite honest here. So let's go ahead and let's kind of analyze that. So looking at the Bollinger Bands, now that we have come down to lose the 20 simple moving average at the moment, it tells me that unless we are able to recover back up towards about $3.40 and get a close above this 20 SMA, the ability for us to push back to the downside of this Bollinger Band envelope becomes much more likely, okay? Now, typically speaking, that's not a bad thing because, we need to see those touches before we can see those continuations. But the issue with this becomes that if we are to come back down and touch the bottom side of this Bollinger Band envelope, it may entail that we're setting a new macro low on the daily charts, which has extremely bearish, implications to it. What that tells us is that we could be looking at some rather large, of course, A, B, C correction, with that C wave meaning an even further extension to the downside, which could look like a fall towards $2.50 to possibly even $2.20. And so in, the best case scenario here is that we don't lose $2.91. And considering the fact that our Bollinger Band envelope is below that right now, it says that that is on the table, and we don't want to see that play out. So in order for us to not see that play out, we need, of course, to see support get established. So is there any support levels that could stop us from seeing this fall? Now, do remember, realistically, the entire market is revolving around Bitcoin. So if Bitcoin crashes, so is everything else. But looking at the Mana charts, for example, one thing we can see is that our green box is serving very well right now. Now, of course, you guys know that the green box is going to be our 618 to 786 Fibonacci retracement zone. If you draw a swing high to swing low Fibonacci from your most recent local low to local high, you can see it puts our 618 to 786 zone between $3.32 to $3.15. Now, generally what this means is that when we see these larger moves to the upside, followed by a larger correction, these corrections will only go into the green box before continuing upwards if we are going to see a continuation of an uptrend. In the event that we see the green box get lost and we start to fall below it, that will typically mean that this is no longer a retracement and likely some type of reversal that will lead to a lower low than whatever started your Fibonacci. In this example, 291. So what that tells us is that we need to be paying a very close eye on $3.15, as that is our minimum level of support right now. If we come down to lose that, the only thing that can stop us from falling at that point is an ascending level of support in which we've established over the last few months here. The loss of both of these levels, likelihood is results in a lower low, which could definitely mean some type of continuation of a fall to the downside, again, somewhere between $2.60 to $2.20, and none of us, of course, want to see that happen. So we need to be paying very, very close attention to if we are able to establish some support above $3.15 or on this ascending level of support, because if not, likelihood is what we're going to see is an increase in volatility. Our Bollinger Bands open up, and then we start to chase these Bollinger Bands to the downside, which looks like us putting in a lower low. We don't want to see that happen, okay? So keep a very very close eye on $3.15. I don't mean to be the bearer of bad news. I don't mean to be the Debbie Downer, but I don't want to provide you all with a biased, analysis on something, even though I have my own bullish biases myself. Of course, I'm invested into it, so I want to see it go up, but I'm always going to provide you guys with the true facts of what I'm seeing. And fact of the matter is right now that the loss of $3.15 on a daily closing candle likelihood results in a continuation to the downside. Now, at that point, do we put in a W bottom? Possibly so. But if we do start to lose that level, you guys know, like I said, it may get a little bit ugly. So with that being said, keep a very close eye on that. If you start to see the price reversing, we need to get back above this 20-day simple moving average, looking at currently a price of $3.43. If we can get a daily close above $3.43, I will say that, likelihood is we are reversing and that we may have looked at a great retracement back into our green box that's followed by a continuation to setting of a new high. So just pay close attention to these. Some of you may say, well, you're saying it could go up or it could go down. And like I said yesterday, I'll say it again. That's what crypto is, okay? I'm not a fortune teller. I don't have a crystal ball. All I do is explore and analyze the realm of possibilities and then present you all with the information that I find. And what I'm finding right now is that we need to get back above 243 for me to get extremely bullish again, but I'm still relatively bullish as long as we're above $3.15 because the realm of probability says that as long as we're up here, we can still look at a continuation to the upside. So with that being said, of course, I will continue to update you guys as this all does play out. I will continue to, just to let you know, are we looking good? Are we not looking good? I will always try to provide you with the most unbiased opinion that I possibly can. And if you do appreciate that, I would just appreciate it if you can leave a like or you can subscribe to the channel just to show some love. But with that being said, I will see you all in the next video. Peace.